we're moving to our next panel discussion focused on investments and financing in the GCC region. We have distinguished speakers today, and I'm giving the floor to your moderator, to the moderator of this session. Sanjeev, please, the floor is yours. You have 45 minutes. Let me put the timer on, and 5 minutes before we finish, I will wave you so you can start wrapping up. Okay, thank you so much. We're starting. The floor is yours, please.
Brilliant. Thank you very much. So we'll take 35 minutes for the panel, and then we'll leave 10 minutes at the end for Q&A as well. So thank you very much for the invite on this, Alex. I think it's a very interesting time for the region, as we all know. But from a positive momentum perspective, we're seeing the UAE consolidating, buying out the astronaut into Space 42, the innovation hub leaning more into space and how they can position themselves there. We've seen Oman has opened up EarthLife and is signing partnerships with North Star. Same with Bahrain having launched Light 1 into orbit, and obviously Saudi Space Agency and Saudi Space Economy going to about 8.7 billion with 253 domestic companies. This is against the backdrop of a globally space market hitting over $12 billion last year. And obviously the big update for the industry being the potential or pending SpaceX IPO, which is driving a lot of momentum globally. So with this in mind, I'm pleased to be joined by a very strong panel here today of space specialists, both from the region and more globally. By the end of the discussion, I think we want to really see how we can provide food for thought on the opportunities within the Gulf region, but also against the backdrop on the global space market, and how to best position strategic investment opportunities alongside financial investments. The two can sometimes have very different objectives, but we need to ensure true alignment within these two for the ability of these allocators to both complement each other while still achieving their own objectives and goals. Before we start off into the questions, I'm going to open up the floor for quick introductions, so a minute each for the panelists. Mark, starting with you, if you want to just give a quick background on yourself.
Thanks, Sanjeev, and thank you for inviting me onto the panel today. It's great to speak to this audience. So, Mark Boggart, I'm CEO and co-founder at Seraphim. We're a thematically focused investment firm based out of London with offices in San Francisco and Berlin. We have a space accelerator program that operates a couple of times a year with 10 companies on there with a global outlook, so spin-outs from universities. We run a space venture fund that invests in seed and Series A, again, with a global outlook. And then we have a publicly listed growth fund, which is listed on the London stock market. So across all of our activities, we've got 150 space tech companies.
Thank you very much. Raphael, coming to you next.
Yes, Assalamu alaikum. Happy to be here. Raphael Rodkim, I'm a founding partner of E2MC, which, like our friends at Seraphim, is a purely space-focused early stage investment fund investing globally. We're based in Arlington, Virginia, so just outside of Washington, D.C., but we have investments to date in 8 countries around the world. Very interested in the GCC region, very excited about the fact that the leadership there is clearly also very excited about space, which opens up a lot of opportunity for long-term thinking and really the strategic development of the space sector, which is something we will be very happy to help with to develop these indigenous capabilities.
Thank you very much. Amru, coming to you.
Thanks, Sanjeev. Glad to be here and thanks for the invitation. My name is Amru Alamoudi. I am the CEO and co-founder of SARsatX. I worked in a few space companies, including Boeing and El Segundo and the Saudi Space Agency and NEOM, and as well as the New Space Group, the PIF subsidiary. I see many familiar faces, so it's an honor for me to be among this panelists. Thank you so much.
Fahad.
Hi, my name is Fahad Alhussain. I'm the co-founder of Nadir Space along with Frank Salisbury. Previously was in another VC firm focused on the space, Seedford, where we invested in a couple of space companies, including the SpaceX, Axiom, Voyager, Privateer. Prior to that, was a CEO of multiple companies with background in physics and satellite communication.
Thank you very much. So yeah, as Alex introduced, I am Sanjeev from Type 1 Ventures. We are a VC firm headquartered in Los Angeles, but with offices around the world. I'm actually heading to the region tomorrow. We're opening up our first office in the region officially in the next couple of weeks. So looking forward to kind of spending more time there as well. Type 1 invests full stack from pre-seed to pre-IPO. And we invest in two core pillars being space and computation. So with this, I'm going to kick off on the questions. So one of the first things that I want to kind of address here is the difference in objectives sometimes that come across from sovereign capital being invested and VC funds that are being invested. VC funds have a fiduciary duty to their investors, looking at the returns, etc. Sovereign capital has sometimes a different objective with regards to sovereign capability. Mark, Raphael, I'm going to come to you first. Into like, what do you think of, and how do you price the premiums of sovereign capital and the sovereign capabilities when looking at these investments from a financial perspective? And is there a premium that you're looking at there when it comes to things like sovereignty, domestic IP retention, talent, etc.? What do you model into this when thinking about the two? Mark, I'll come to you first.
Sure. Well, we're pretty pragmatic about this. We don't sit there trying to put a notional number on sovereignty and add it to the IRR. What we do instead is look at whether the strategic value actually makes the business more durable. So data sovereignty, local IP, skills, they only matter to us if they improve the long-term outcomes. Do they give stickier customers, better contract visibility, protection from regulatory shocks? If they do, then great. They genuinely improve the return profile. Where it goes wrong is when strategic value only shows up after something hasn't quite worked. So if the unit economics don't hold, governance is weak, milestones keep slipping, suddenly there's the defense that this is strategically important. That to us is a red flag. For us, sovereignty is an enhancer of value, but the moment it starts to become an excuse for poor discipline, it's no longer a strategy.
Yeah. Raphael, how would you think about this, especially when it comes to the financial discipline?
Well, I think actually in very similar ways as Mark. So maybe to mention some more examples here. So I think sovereign support can be a wonderful thing, right? Mark mentioned sticky customers, right? That sticky customer very often can also be the first customer. In that regard, it can help shorten development cycles, which can be very important in a deep tech industry like that. It can help with business development because that first customer can be like an anchor, like a lighthouse customer, where other non-government customers then feel comfortable to come in. Of course, in other sort of very tangible financial terms, government support, whether that's via grants, investment contracts, it can help you just lengthen the runway, right? So these are certainly things we take into account. There is another side to this, which Mark also alluded to, that sometimes we think about this in that the companies can't get addicted to the government customers, right? Like what we don't want is zombie companies that if the government policy changes, they just go away. So we typically would probably avoid like single government customer or single government investor companies unless we have really reason to believe that demand is going to be there through various administrations and through the long term. So as is the case, for example, for some defense companies. The other thing, which I think Mark alluded to, is sometimes these companies, if there's a government, let's call it like big daddy there, companies can get addicted to that support. And yes, that has very often impact on discipline. That's obviously not something that's only relevant to the GCC region. We see that in pretty much every region around the world. But look, we're very happy to work with sovereign funds, other government stakeholders. If it's done well, it can be very helpful for everyone.
That's the interesting thing, right? So in other regions, and maybe this is a bit of a learning opportunity for the GCC, but in Europe in particular, unfortunately, and Mark, you'll laugh at this because we both had this conversation, but unfortunately, we have created and seen grant junkies, right? So there's companies, as you mentioned, who use milestones or use grants as milestones. And we definitely want to move away from that because that model isn't actually any validation for the company. It's a matter of actually making sure we utilize sovereign capital in a way that is getting best returns for those companies, not just from oh, here's a bit of a grant, good bit of grant carrying on. And on that note, Amru, I know you've worked on a few different projects there. How would you approach it, and what kind of things would you want to see from sovereign capital coming through to these projects?
Thanks, Sanjeev. Very important question. I'm thinking maybe mostly I'm an end user to the panelist here, as I have my startup and I'm representing SARsatX. Geopolitics plays a dynamic role into sovereign capital and where it goes from what region to what region. And so what does sovereign capability or sovereign capital means to each region, to each company? And with that, to attract sovereign capital from outside GCC, you would need to have some geopolitical alignment and similar interest. And so that will encourage sovereign capital coming, for example, from the UK or elsewhere in the world to GCC. If GCC venture capital also contribute and attract that foreign sovereign capital coming to the GCC, meaning match their fund, co-fund, and take venture into co-funding and match the fund coming from outside the GCC. We have a good example in Saudi with Seraphim and Arabsat. So there's a story about Arabsat maybe partnering somehow to co-fund with Seraphim, and that's just a great example how you bring in venture capital into Saudi and GCC, targeting sovereign capability and sovereign capital, attracting sovereign capital into the kingdom. Because if venture capital in Saudi and the GCC does not have skin in the game, why would a foreign venture capital VC come into the region? So that is an example that maybe we can multiply in the future that I just shared with you. That's a quick thought on your question. Thank you, Sanjeev.
Brilliant. And Fahad, coming in from the Nadir Space side, where you're on the ground, you're seeing this both sides. You're kind of in the middle here with that element. What do you think, as I said to Amru, what do you think you can kind of add to it, and how do you think you could position your fund in the middle of the two?
Yeah, so being between the US and Saudi, I think there is a big difference between the two ecosystem, and we all know that the space economy or the space industry is just emerging in the region. It's not as mature as in the US. And let's face it, I mean, even in the US, if it wasn't for the government, if it wasn't for NASA, would not see SpaceX, will not see the Lockheed Martin of the world, will not see the Boeing, and without the US Army and the defense. So we are in a stage where patient capital is needed to actually carry this industry a little bit to maturity. Then VCs comes along. It's not in our KPI, as I think Mark and Raphael mentioned, to build local capability or sovereignty. That's not our job. We're a private firms that we have to, adhere to our customers and get the right returns. So I see it as a necessity for government to focus on this sector and build the infrastructure, and then we come in the top where we help grow it, just like where we have a good, for example, IT and technology apps in the region, and we have so many startups that are flourishing. But before that, government did a lot of work. So I think the same need to be done to get this industry to mature stage.
You mentioned a really interesting point there with regards to patient capital. And if we track back to venture capital and timelines, going back 25, 30 years to where we're at right now, private capital is slightly more misaligned. People are wanting investor returns a lot sooner. But the interesting thing is government capital was meant to fill that gap. Do you think that's still happening, or do you think even governments are starting to reduce their timelines and see things differently? And Fahad, seeing as you mentioned that, I'm going to come to you first on this.
Yeah, I think Amru mentioned about the geopolitics. Government has the intention to do this, but sometimes the budget and shifts to more urgent, areas than others. There have been bigger plans in Saudi for the space and the deep tech, and eventually it will happen where it is supported by grants or even do some matching fund help the private sector to grow some fund in these high risk areas. I see patient capital from the government. If the plan is to grow this industry, is a must to do that.
Yeah. Raphael, coming to you on that same point, which is around patient capital, the potential of misaligned timelines with companies and financial investors and sovereign capital. Like, where do you think we are on that? How do you think it comes together?
Well, I think, are you asking from my perspective, from the
Yes,
government's
sorry.
perspective, from the
No,
companies?
from yours as a purely financial investor.
Yeah, so I think again, for us, it's probably very important when we partner, and we really see these as partnerships, when we partner with sovereign investors that we understand. I mean, my first questions going into these meetings, and it doesn't have to be a meeting about a specific investment opportunity, but just when I meet new sovereign investment entities, which I frequently do, is to understand their underlying strategic objectives. Like what is their mandate, right? And then also understand where it is coming from. What are their own stakeholders? How is that rooted in other policy? And then hence, to Fahad's point, like how may this be impacted or not impacted by things which are going on outside of the sovereign investor, like geopolitics. So we're trying to really kind of take a step back and understand what is going on in a larger context before we're comfortable co-investing.
And Mark, for you, you've been investing in space since 2014 now, right? I remember coming into investing with you in 2015, 16. Do you think time horizons as financial investors, especially the LPs coming in, do you think that's reducing? Do you think that's still keeping up with the type of innovation? And where do you think we are at with fund cycles and space?
Yeah, I mean, what we're seeing is investors from around the world embracing space. There's been a sort of a rapid understanding from investors about the opportunity represented by space over the last 5 years, and I'm surprised really at how much risk investors are prepared to take in this market. You know, there are companies that are looking to do exciting things on the moon and in space travel, are now, really finding it very straightforward to access large amounts of capital. So I think that the risk appetite of investors globally has changed, and with that, also the sort of the time period that they expect to see a return on that investment. So I think that private investors have gone in one direction, preparing to be more patient. And then I really see sort of governments, and if you look at sort of what's happening in America as an example, going the opposite direction. So creating, more uncertainty. So what that's really sort of led to us sort of positioning when we're thinking about investing into companies, we're really thinking about can these companies survive if this subsidy is removed? And that really is something that we really, really are very focused on when we're doing our diligence on any of these companies. That there may well be this investment from a sovereign wealth fund, or there may well be this grant investment that can be achieved. But what happens if it disappears? What happens if the second tranche doesn't come through? And making sure that when we make investments, that we're really focused around the sort of syndication, the people who are around the table, that we've had these conversations in advance. What are we going to do if this phase 2 of the government contract doesn't come in? how do we make sure that this business still survives? So that's really how we've been thinking about this.
Sanjeev, may I add on one point,
Yes.
which I forgot, which I think is relevant here?
Go
When we
ahead.
talk about patient capital, I mean, one actually thing that's really important here in the background is the keyword of liquidity, because people like Mark and myself are running 10-year funds with some extension periods, but not forever. And so we have to think about how to get our capital back. But there are solutions to that, right? And that ranges from secondaries all the way to, I'm a very big advocate that the public markets should increasingly be involved in the space sector. And we see that happening, right? We had several IPOs already this year. And Mark, as a public vehicle, I IPO'd a $230 million NASDAQ vehicle in January. But I think there are solutions to the liquidity question.
That's really interesting, because one of the things I was going to raise later on was with regards to, and you up, let's just jump straight into it because you raised a point anyway. So the financial structures and the financial maturity around space, we see the structures changing. We see the cycles of, like I said, the 10-year funds necessarily not wanting to be that long. We need liquidity opportunities. You've got the structure that you listed. Mark, you guys have got the fund that's listed. What do you think the GCC region can learn from this, coupled with the types of bond issuance, types of markets that they're trying to create with ADGM, etc.? What do you think they can be doing for this? And Raphael, just please continue, because seeing as you're going down this line, I think there's going to be some interesting thoughts from your side.
I think the GCC has everything here to make this happen. It's a extremely sophisticated financial center. It's also a financial center where people are comfortable that the rule of law holds. So I think it can really be the full, and I'm speaking as a former investment banker, the full financial toolkit, right? I mean, we've pretty much so far built the space sector on pretty much only equity, right? But there is really no reason now that we start expanding then into debt, and that's obviously starting to happen. And we see that both also with government involvement, right? Like the EIB is the biggest venture debt source in Europe. So debt, but also other things, derivatives, certain types of performance bonds. I think the full toolkit is available and will over time be phased in. And the GCC, as a very established financial set of financial centers, can benefit from that.
Yeah,
Well,
I mean, just adding to that, and sort of taking it from a sort of different perspective. I think that the focus needs to be broader than just domestic. I think that what the ambition needs to be is to create global champions that are born out of the GCC but are competitive on the global stage, and that I think is a sort of mindset. And one that I think that in order to succeed and have a group of sustainable and successful and large-scale space companies, that is what that they need to be looking to achieve. And I think that there is a sort of I don't think that's where the mindset is today.
that's a really interesting point, because one of the things, so early last year, I was in Riyadh, and I was truly blown away by the Vision 2030 momentum. And it's right from speaking to the taxi drivers, to people in the hotels, as well as individuals working within the government. That vision of what we're going to achieve and who we're going to achieve as a nation. We've seen that happen with Vision 2020 in the UAE. We're seeing it happen in Saudi and with other countries in the GCC. But with you guys on the ground, Amru, I'm going to come to you first, but how do you navigate this vision into something that is investable to create the champions on a global level, like Mark just referred to? And I kind of want to tap into your not just your end kind of business at the moment, but also the work that you've done with different agencies as well.
No, thanks, Sanjeev. Just maybe expanding on Mark and Fahad's point, for fund and venture capital fund to come in and invest in the GCC, I think government support is very critical because it adds credibility. And I tell you, a lot of startups here in Saudi, once they get some grants, like from NDTP program, all right, the venture capitalist would come and be more comfortable to invest. And it's about also raising the maturity of the ecosystem in the GCC country, meaning you would have enabling tools such as how to make startups survive and achieve some milestones so that VC can invest and be attracted to invest in them. For example, subsidies or subsidizing salaries. You know, in the kingdom here in Saudi, we have a lot of program that subsidize salaries for startups. And not only the grants, as well, free access to labs is very important. It's there. It needs to be improved. It needs to be more in mass level, and I think we're going in that direction in Saudi and the GCC country. And I like the comment that Mark mentioned, which is not to be domestic. So especially space company that does hardware, if they only look domestically, they're not going to achieve financial solvency. I think they need to think about global market and global presence and be competitive globally, and so they can have a financial solvency or be attractive financially for an investor to come in. So a lot of ecosystem enablements that has to happen domestically to reach global attractiveness for global capitalists. This is thing that I've been experiencing through working in the agency and other companies, that the capital will be more venturous and be more taking risk to invest if they see an ecosystem revolving around a few potential unicorns and enabling them so they can have longer durability and better technical feasibility and financial attractiveness. This is what I wanted to share and expand on a few points that was mentioned by Mark and Fahad.
Could I just add something on that, Sanjeev, if I may? I think that sort of what's going on in Germany at the moment is a really good example. We've obviously seen their giant budget where they are looking to effectively rearm, and they've carved out a space element of that 34 billion. And what we're now seeing is this impact that this is having on German companies that can access that funding, but they're doing it not to serve Germany. They're doing it to build businesses that are going to be European champions. And I think that's what exactly the model that GCC needs to take. That they've got the capital, they've got the ambition, and the sophisticated investors to allow those companies that they're backing to serve the needs domestically, but really use that as a sort of a war chest or an advantage to actually grow faster on the global scale.
This is actually a really good example Mark brings up with Germany. So I'm very close to that. But this has had all sorts of positive second order effects already, specifically even foreign companies seeing this significant budget and partnering with local companies to develop local capabilities and capacities.
But this is quite a big point now in terms of the challenge against the geopolitical backdrop. We're seeing the requirements of sovereign capability, sovereign demand, but also needing to have the partnerships globally. Like, how do you balance the two? And Fahad, I'm going to come to you on this one. Like, where do you see this working? Because we do need to create those things, whether it is the need for sovereign launch as a simple thing or sovereign connectivity, but still being able to operate with partnerships. Where do you see companies working together from the companies that you invest in, and how do you see a successful model working there?
Yeah, I want to come to the point that space by nature is a global. I mean, it's a very global, the nature of the whole business. When you are up many of 600 kilometers from the ground, by nature, you're global. I mean, we look to startups that have not necessarily domestic ambition, but in a global scale, that they have their own niche and capability. Now, when it comes to the question about international partnership, and there are many, I think it was mentioned just before this panel, D-Orbit. D-Orbit is a company that we're looking up very closely. a European company that is planning to do a manufacturing here in Saudi. And it got the attention of not only us as VCs, but also some of the patient capital and regular private equity folks, which is interesting to see all this momentum happening around space industry. So we're seeing a quite good of international and collaboration, building the infrastructure needed to promote the space economy, which is really good for the region.
Brilliant. And with that, I'm going to come back to one of the points that were discussed earlier on with regards to ecosystem. So we've talked about all the positives here with the GCC. There's a lot going on, but where are the gaps in the market? What do we need to see more of from a perspective of that true localization in the ecosystem there? Amru, again, coming to you first on this one.
Sure. I think consolidation of direction in terms of space technology at the government firms need to be really clearly defined, and it needs to have a consolidated program like the one Mark and Raphael mentioned in Germany. There need to be a mega program. For example, in Germany, there is a program about SAR, which is called SARA. It's all about defense and government program that they have allocated big budget for it. And in Saudi and in the GCC, we're coming to that level, but we're not there yet. So a consolidated large program with big budget to enable certain technology for space that will also help consolidate the ecosystem and the entrepreneur, which is the end user of capital in general, whether it's venture capital or government capital, grants, etc. The consolidation is not there yet. So hopefully with awareness, it will be there. Another element is, I think in our region, there need to be a distinguishing definition of what is space and what is data. Because for me, space is not data. I mean, data coming from space is one thing, but if whatever go to orbit, whatever go to space as hardware and sensor and technology, that's real space. Data, I can find it from space, from drone, from any other source. And then if I'm just looking at data, then I'm a data company. So that awareness, that education needs to also reach to a certain level here in our region.
That's an interesting point, and Mark can back up on this as well because of the experience you've had. If we go back 10 years, it was very difficult for venture to look at space in terms of hardware because it was the big primes who had the budgets. And for that reason, downstream was the primary space sector for VC and for investable opportunities if you're not a prime. Now we're seeing that shift because of the drop in launch costs, etc. Is it that we're going to start seeing a separation of those types of companies and segmenting the downstream into more data that's going to go into your more agnostic fund buckets and then your hardware, or are you going to see more vertical integration? Mark, I'm going to put that to you because you do quite a lot around the full integration vertical stack of Earth observation and hardware as well.
Yeah, we do. I mean, when we set up our fund 12 years ago, we actually thought that most of the investments that we were going to make were ultimately going to be downstream, capital efficient businesses. And the reality of 90% of what we've invested into is it's the hardware upstream and the higher risk, more challenging, more capitally intensive areas that we've gone into. The one thing that we have learned over time is that vertical integration pays, and I think that is something that should be recognised and learned by both investors, but also the government sponsors themselves. And I think that by vertical integration, companies can effectively help build more of a domestic ecosystem because they're relying more locally. So in answer to your question as to whether we're going to see a sort of bifurcation between the different types of space investment, absolutely yes. There is a whole range of investors that don't want to touch hardware. There are software-only players, and software and AI and everything that is supporting the defense market is seeing a huge amount of investors that are wanting to make that play but don't want to touch hardware. So there is more money that is willing to come into that sector. It's a larger pool of investors. So yeah, I think companies really need to sort of think about which investors that they can approach. There's now a broadening range of investors that are happy to focus on hardware and high capex businesses, but but the market is still really in favour of the data and software companies.
If I may add, Sanjeev, I mean, because we did invest in some of these software companies, and there is an interesting trends. I mean, operation of if we talk about Earth observation, for example, where you have I mean, a software or downstream based companies that receive from all kind of satellites and try to serve the customer. And the argument that Mark mentioned about whether it's vertically integrated and similar to should you have you on your taxis, or it's an Uber model for providing services to the end user. So it's an interesting play, but we've seen many startups that are playing the downstream only, and probably this is because of the huge amount of data that we are getting from different kind of satellite and constellations. As you probably know, it's only limited percentage of these data are actually utilized. So this drive more and more startup to be in the downstream scene.
Yeah, no, you're absolutely right. Like we're barely scratching the surface as to the quality of data and how we can utilize that data. Amru, I see your hand up here, so over to you.
Oh, thanks, Sanjeev. Just quick reflection. When we are discussing sovereign capital, and the product would be sovereign data, and you can only achieve sovereign data if you do play in the upstream in making system and not using the system. So in making the system, you achieve sovereign data, and then that would probably justify sovereign capital coming to you, minding geopolitics, of course. Thank you.
Yeah. Now, I'm conscious that we can continue this conversation and get much deeper into this, but conscious of time. And this is, I'm going to spring this on my fellow panelists, but 30 seconds. If you had no restrictions on time and no restrictions in terms of capital, what would you want to see in the space industry? Raphael, coming to you first.
I'm going to give you an answer that you probably didn't expect if you ask this question, but I think it's also really relevant for the GCC. For this to be a really long-term, self-sustaining, viable industry, the most important thing is education. Look, and that ranges from the education of the really talented young people in the GCC region to kind of educate them about the space opportunity and get them into that. But it also includes, we just talked about applications. It includes educating non-aerospace customers of space applications about the opportunity that and the potential products and services that space can offer, because most of them still don't know. So for me, it's education.
Fahad?
In case of industry vertical, I would like to see more competition to the launch. I would like to see 5 or 10 SpaceXs around the world. I want, we have a monopoly now. It's almost 70% by SpaceX. We need to have companies in Europe, in Asia, everywhere, where the space become more affordable and we can have, multi payloads easily achievable.
Mark?
It's a very easy one for me to answer this one, and it's one of the things I'm really excited that the space industry is going to deliver over time. But if you're moving restrictions of capital and all of the other restrictions, it's got to be space energy for me. Solar farms in the space environment, delivering clean, reliable energy to Earth to help us with the transition away from oil. And ultimately, this is what the sort of vision plan is all about. So I think that sort of bringing this forward, investing in this early, making it happen is going to change humanity, and that's where I'm focused.
Yeah,
We do need oil for a while, Mark.
I was going to say it's a touchy subject here when we talk about oil. I totally agree with you, Mark. Type 1, we're literally the name Type 1 is inspired by the ability to better utilize energy that reaches our planet. So I'm very aligned. I think there's some really interesting opportunities. At the moment, we're not quite there when it comes to the unit economics and how that is then implemented, but it's definitely going in the right direction. Amru, on your side, just a quick 30
Quickly,
seconds.
thanks. I want to see a better attracting environment to attract VC fund from outside of the region to the region. And I want to see more unicorn from the region to be regional champion and compete globally.
Brilliant. Thank you very much. So we're going to open up the floor to questions. Alex, I'm not sure how you want to do this, but we've got a few minutes. So if there's any questions, please do raise your hand or put them in the chat, I guess.
I will not add anyone to this conversation. You can find some questions in QA box.
All right. So here we've got well, simple questions here. Raphael, Mark, please put your email addresses into this. They want to be able to reach out to you. I don't think we have any others that I can see. Nope. In that case, I'm going to continue with my questions. Okay, so we obviously see the upcoming IPO of SpaceX. Again, short answers so I can get around to everyone. I think there's a few of us who have invested in SpaceX in different stages. What are your thoughts on the short term, and what are your thoughts on the long term? Fahad, coming to you first.
Yeah, I mean, the valuation, I think, what is it? Is it 1.6 trillion?
So 1.7 is what they're saying, but bankers are saying it could even get to 2.2. But
Oh my God. I mean, that's really good for the space industry. And I don't know if there's going to be any money left for other IPOs. I hope it will. I hope it will be sustainable in a way that it matches the valuation that's been done. It's we are investors in Axiom Space, which is coming, I think, next year. So we're hoping that the follow-up IPOs will be in the same scenario and better.
Mark?
Yeah, I think it's net positive, short and long term. We're going to see significant more capital coming into the sector, where that is going to lift all boats. So I think that is good news for the companies in all sectors of the space industry in all parts of the globe that are looking to raise money. It's really sort of focused investors' attention, and I see that as net good. Over the longer term, the ambitions of SpaceX, I think, have defined this market for a decade, and I believe they're also going to define it for the next decade. Starship becoming a weekly occurrence, it will change the space market in a number of really positive ways and enable mega launch, mega infrastructure that includes, the data centers and energy capability. So yeah, I think valuation, is the valuation. I still think this is going to become one of the world's most valuable businesses, because they're going to be delivering against these things we're talking about.
Brilliant. Raphael?
Oh, yeah. I have many thoughts, most of which I'm not allowed to mention for regulatory reasons because I'm a director of an asset company. But yeah, let me echo that. This is going to be I think this might be the biggest wealth generation event ever, unless I'm missing something. So the potential if it goes off well, right? The potential for capital recycling is enormous. And also it'll have, I'm pretty sure it'll have other second order effects, like people who are currently at SpaceX and are now financially very comfortable, possibly starting companies or investing in other companies.
Yeah. No, I definitely see that as a really big positive, and that's the bit where I see some really interesting shifts in the dynamic of the space sector. The only thing I'd say, and on a slightly more controversial side, is unfortunately anyone who thinks they're going to do a quick buck out of this type of thing, they're always going to get an interesting ride and might not necessarily see the types of upsides that we're talking about here. But for those investors who are truly thinking about this from a okay, this is an opportunity which I'm going to hold for a few years, I do still think even at your 1.72 trillion valuation, there is still upside in the longer term. Amru, we've got, I think, a few seconds left for your comments.
Quickly, I think we're just touching the surface here because this valuation, an example for the SpaceX, it's for the next generation and the generation after. And when you deep dive into their vision and ambition, it's about creating Martian village on Mars. And so, I see a long run there that the valuation may even increase more in the future. And so, with that ambition, I think it justifies where the valuation is at right now.
Brilliant. Well, I'd like to thank the panelists here. You had really insightful nuggets for the audience here. I think that came through the messaging for all of us. The opportunity within the GCC is absolutely huge. The momentum coming through on the global stage when it comes to space, as well as the regional, it's just making sure we have a better aligned objectives and also ensuring that we are collaborating a lot more. So with that, I would like to thank the panelists once again, and thanks, Alex, for putting this on.
Thank you so much.